Hi, my name is Aya Yoshioka, Portfolio Consulting Director and Senior Investment Strategist here at Wealth Enhancement. Welcome to another edition of 7 Market Movers, where we cover topics from economic growth, interest rates, geopolitics, inflation, and much, much more. Today is Thursday, August 21st, and here is your 5-minute rundown of the key events that have shaped markets over the past week. Let's start with retail sales data that we got last Friday. That showed growth of 0.5% month over month during the month of July. And this was pretty solid, but below economists' expectations for a 0.6% increase month over month. We saw 9 out of 13 categories see an increase, led by motor vehicle sales. And there was also strength at online retailers, presumably helped by Amazon's Prime Day events back in July. We hope you got some great deals then. To add additional color, Walmart reported earnings today, and they noted they saw sales strength from food to fashion, but also provided some insight that consumers were absorbing about 150 basis points of grocery inflation. So on Tuesday, we got housing data. Housing starts increased by 5.2% month over month against an expectation for a decline of 1.8%. So that was a really big positive number there. However, building permits, a leading indicator of future builds, declined more than expected, down minus 2.8% month over month versus economists' expectations for a negative 0.1%. On Wednesday, we got Fed minutes. This is minutes from the FOMC meeting that occurred at the end of July. And it looked as though most FOMC participants were more concerned about risks related to higher inflation versus the unemployment or labor market backdrop. However, this was before the August 1st payroll numbers, which showed large revisions to the overall labor market. Jobless claims were another data point that we saw today. This is an indicator that we closely monitor, and it showed unemployment claims were 235,000 this week, about 11,000 greater than expected. So we're clearly seeing some softness in the labor market. We also got the Philly Fed survey today, and that hinted at rising underlying inflation in the economy. The index dropped to minus 0.3 from a positive 15.9 last month. And this showed that the prices paid component of this index surging to 66.8 versus an 8.0 reading last month, hitting its highest level since July of 2022. The overall combination of declining business sentiment and signs of rising inflation are understandably weighing on markets this week. And with that, we saw the S&P 500 down a little over 1%. The NASDAQ was down a little over 2%. And tech stocks, particularly those tied to AI, saw renewed selling pressure. Valuations remain stretched, and investors are taking profits after strong rallies in many tech stocks. Turning to the fixed income market, we did see yields on 2s and 10s edge up about 5 basis points in the last week. Again, the combination of increased economic uncertainty and the Fed's data-dependent policy approach has amplified market reactions to incremental economic surprises and unexpected data points. With that, all eyes now turn to Jackson Hole, where the Fed Chair, Jerome Powell, is expected to speak tomorrow. Markets are watching for clues on the Fed's longer-term policy stance, especially in light of sticky inflation and slowing growth. In summary, this week was marked by a sense of recalibration, both in terms of expectations and positioning. With investors taking profit in tech and the Fed signaling caution, investors are reassessing near-term risks. As always, staying diversified and disciplined remains key, and despite some near-term volatility, we remain focused on the long term. Thank you so much for watching, and if you have any questions or would like to discuss markets further, please reach out to your financial advisor, and we'd be happy to have a conversation with you here at Wealth Enhancement. Thanks again, and have a great week.